How do you feel about switching to at the money straddle overnight for someone who is a connoisseur of puts? I mean, under 4,100, I'm not going. I'm not going delta. I'm not going delta neutral overnight. This is a guide who's conservative, hoping they at least meet. We can just creep up from here. They have 12 quarters to improve earnings, 0.45 to positive. Less than 4% of improvement per quarter is all it takes. That's a pretty good deal. There's about a Microsoft 265p weekly for fun. You know what? I might wait to see if this bounces into the end of the day. How much are weeklies? Holy shit, they're cheap. Let's see what happens. I should actually buy one more of these. 4,100 upside possibility tomorrow? Yeah, 4,100 is not out of the scope of possibility. There's not a lot of interest there that isn't negative, though. Like, there's not a lot of call interest there. NVIDIA puts for July 200, September 180. Should I reposition today or ride it out? Thanks for what you do. I think you got plenty of time to wait and see how, like, what direction the market takes through the Fed meeting. Do you see any stranded SPX calls the bulls may want to do a rescue operation for? No, not long calls. Those broke down mostly yesterday and the day before. What's your opinion on GME being down 15% since positive earnings? It's still overvalued by about $10 a share, at least, maybe 11. You think GME 16 or 21st? I think that'll depend on the market. If we make it to ETF FTDs above, we might see a test of 20. Guidance for a $40 cost basis on GME. I mean, keep trying to reduce it and average it down as much as you can. I'm not going to shame you. I understand a lot of people have shitty cost bases on GameStop. But yeah, I mean, those are your options. I assume you're looking to hold for the foreseeable future until some sort of growth is attempted. Holding 90% of my GME in a broker that doesn't allow trading U.S. options nor transfer the shares out. Ugh. Waiting to sell and buy back on IBKR for CCs, or sell and move on given the outlook. I mean, I don't think the outlook's terrible for GameStop. It's just, we're not in a great macro environment, and it's going to take time. So if you want to stay long GameStop, I suggest you use the opportunity that the low prices present to average down and reduce your cost basis with covered calls until we move into a period where more growth is sustainable, or at least attempted. I mean, GameStop hasn't really attempted to grow yet. We're moving into M&A, like probably a strong M&A environment. I don't know what acquisitions GameStop could make that would be beneficial to it, but I'm sure there are a few. There are definitely some private companies that come to mind, but that may be something that GameStop attempts over the next year or two. They still have store closures, so that book value will go up as they start shedding more and more of those obligations. Are you saying fair value for GME is $8 to $9? Roughly, yeah. I heard GameStop's in talks to buy out Fubo. What would they do with it? It'd be interesting to see GameStop go full circle and purchase Barnes & Noble. Barnes & Noble might not be such a bad buy. I think people are kind of moving back towards physical books, and I was in a Barnes & Noble's the other day, and they have a lot more shit now. They have like a full toy store in there. All the like nerdy anime shit that GameStop makes money on. So they could probably get better distribution deals. That might not be the worst acquisition. I think something like Micro Center would be better. Down's done for today? Not necessarily. Just a lot of repositioning. Say there's about $40 long-term cost basis. Say you get assigned at 20, what then? Sell CSPs? Yeah. Buy back same shares for less. Yeah, I mean, so if you have a $40 cost basis and you sell $20 covered calls, you've netted premium, right? You get $20 a share. If you buy back at $18 a share, you've got additional premium, right? So you got the CC premium and the CSP premiums. per share, right? So say, let's say you get 50 cents on each one, right? That's $1. And then you've bought back $2 cheaper, so that's $2. So you've shaved $3 off of your cost basis, right? Provided you reinvest the premiums.